One of the most challenging and interesting things I've done in my trading career is working on an automated trading system. I worked on that for over a year, back around 2013, along with an amazing team at my company. And this was definitely a really fulfilling time, but it was also really bloody frustrating as well, especially when you thought you'd made good progress on something only to find it was a dead end. So because of this, we managed to build loads of different variations of the system, as well as other tools and indicators and things like that. Some of them work amazingly well and are really useful even today, and others are complete trash. In fact, some perform so badly and they're just so useless that it's actually hilarious watching them work on the charts. So at some point, I will talk you through my experiences during that time and show you some of the different things we built, including the embarrassing ones. But for now, in this video, I just want to share with you some of the lessons that I learned. I was learning so many important new things every day during that time. So there are so many lessons I could share with you. But for this video, I've just condensed it down to 9 key things I learned. And these are things that have actually improved my manual trading, not just the automated system, and have helped to shape the method that we teach here at the Duomo Initiative. And these are things that you can get started with straight away that will have a positive impact on your trading and your overall performance as a trader. So just before we get into it, please do hit the like button on this video as it does help the channel out a lot. And make sure you're subscribed for the very best trading content on YouTube right here. Let's start with the most important one that every trader should be doing: documenting everything. There are 2 parts to this: documenting your approach to trading and then documenting each trade itself. So when we first started working on the automated system, I'd already been trading profitably for many years before that. So I knew that what I was doing was consistently profitable, and in my mind, I knew what it was that I was doing to achieve that. But when it came time to explain that to the person that was coding the system and the rest of the team that were working on it, I had a bit of an issue. Because I could explain what I was doing from a high level and the most important tools involved, but there were gaps. And these gaps were all of the nuances and the grey areas, the things that I was deciding in the moment and had no idea how to explain. Where do I even start? So that process of figuring out how to put my system into words has not only allowed me to teach it to other people, but has also helped me to gather my thoughts and challenge my own thinking more and more in a way that has helped me improve my trading and stay more and more consistent. And the second part is about documenting your trades, like your actual trades. A lot of the next lessons I'm going to teach you throughout this video wouldn't have even been possible if I hadn't documented my trades. You see, as we were running the system and needed to check if certain trades picked up from the system were correct, I could go back through my journal and see which trades I had picked up. And it also then gave actual real-life scenarios for the rest of the teams to be able to break down and analyze to see how the system works in a real situation. The important thing with documenting your trades is that you don't just do it for the sake of it, like most people do. But instead, you need to actually make use of the information to optimize your performance and to become a better trader. Most traders might think that they're doing something systematic with their trading, something that's repeatable. But actually, I'd say that a huge percentage, maybe even the majority, are not doing something that they can repeat time and time again. So the aim for most traders is to become consistently profitable. But if you're not doing something consistently, then how are you going to achieve that? Working on an automated system really put an emphasis on that for me. So suddenly you need to actually think about how you quantify everything. Like, oh, you're looking for a wave structure that's just right. Well, what does just right actually look like? Quantify it, otherwise you can't stay consistent and you can't code it. So I think if you want to be a consistent trader, you need to look at your trading approach objectively. So since you're now going to be documenting your approach, you can then look at that and see where you have certain grey areas, things that aren't systematic, and whether it's necessary to have it that way, or if you're just kidding yourself and trying to make life easier for yourself by having all of this leeway for you to use. So I think if you want to be a consistent trader, you need to look at your trading approach objectively. Since you're going to be documenting your trading approach now, you can look at it, what you've documented, and see where there are those grey areas, things that aren't systematic, and then challenge yourself about whether it's actually necessary to have it that way, or if you're just kidding yourself and giving yourself way too much leeway. You may have heard me speak about Occam's razor before on this channel, and that's basically this point. So online, you tend to find loads of traders talking about how people are overcomplicating their trading. They might say things like, all you need is good risk management and support and resistance and you'll make profits. It's people's psychology that's causing them to lose. And well, the last part of that statement might be true, but the first part of it definitely isn't true. How do I know that? Well, if it was true, you could easily program that into an automated system and make endless profits. But the fact is, the simple strategies that you see everywhere, they just don't work. If they did, you wouldn't need to be doing them manually. So don't fall for this trap. Anything that's been around for decades and is used by hundreds of thousands of traders and can be coded by someone with even just a basic knowledge of coding, those will not work. On the other hand, you also don't want to overcomplicate things either, because when you do that, you're going to have problems with staying consistent because there'll be way too many nuances. So instead, you want to keep things as simple as possible, but not any simpler than that. One of the main members of my team working on the system was a physicist who was also a very experienced financial professional. So he was very much focused on the theoretical side and the actual coding. And he was constantly encouraging us to look for something that he referred to as an elegant theory. This was a theory that didn't have an open end. There weren't too many grey areas or obvious flaws. It was something that was pretty airtight, self-contained, and a good, simple basis for why the system was doing what it does and why it worked. This one follows on from the previous points in the way because all of the points up until now have been about how to make things more systematic, almost robot-like. But one of the most difficult things that we encountered with an automated system was almost the opposite of that. It was about how you replicate an understanding of the context of the markets. You see, human traders don't really have many big advantages over computers in the markets, but one big advantage is an understanding of context. If you try to build a system that's too systematic and too binary, you're not going to succeed. Instead, you need to be able to adapt to what the market is showing you and understand how you need to be approaching things differently based on that context. This was by far the most frustrating part of building an automated system, and it was the reason that our system took so long to build. Like literally around the clock for a whole year, a whole team of people working on this. And it was only like after just a month or two that we built the system that in backtesting was able to make about 200% profit in a month with reasonable risk control. We thought we'd already nailed it. We thought straight away within a couple of months we had not only recreated my trading, but it was actually outperforming me because it could be switched on 24 hours a day on multiple markets. We were over the moon. But as time went on, beyond that month, the results started to vary dramatically. That 200% return month was an exception rather than the standard result. And the problem was all with the context. It had all the black and white criteria if it understood the context, but it didn't. Now, for manual traders, this is all about building experience. There are some things that simply can't be taught. You need to build the experience and have this bank of knowledge of different situations that you've seen that are going to help you to connect the dots and understand how to approach a particular trade at a particular point in time. So although you can learn something in super quick time, that's never going to be a substitute for actually dedicating the time, the months, the years to following the markets and trying to understand how and why the price has moved in a certain way. You might have the best system ever, but if you can't understand the context in the right way, you might never make any money from it at all. Alright, this one very much follows on from the point about context. You see, when we started breaking down the data and seeing how the system performed in different market types, we realized that it could make the correct adjustments and deal with different situations correctly. The problem was with the times that it shouldn't be trading at all. You see, with the Duomo method, we only trade steady state markets, and we avoid what we refer to as herd activity markets. For years before we even built the automated system, I was avoiding trading during times when there were major economic news events that were going to disrupt the markets. However, when we were building the automated system, we found that you can have similar disruptive times even when major news isn't hitting the market. There are certain types of market activity that didn't give the same characteristics as the steady state markets that we were meant to be trading. So in that case, we needed the system to be able to identify when this activity was there and therefore to stop trading, to avoid getting involved at all. And you should be doing the same with your own trading. Earlier this year we had a video about negative filters, and you can use these negative filters as a way to show you when you should step away from the market, things that don't match your criteria for even being involved at all. As I always tell our members, just because you have a setup, just because the price is interacting with a particular significant level, it doesn't mean you need to trade it. Good trading is just as much about the trades you don't take as much as the ones that you do take. So knowing when you shouldn't be in a trade is going to be critical. And this, once again, comes down to understanding the context, just like the last point. So make sure you think about how you have these fail-safes in your system that take you out of the market, that you don't even engage. Everyone knows that you need to test your system, but I actually don't think many people do it. So the first thing for this point here is that you need to actually test your system. But then you also need to go a step beyond that, because you need to test the different parts of your system as well. What if there's one part of your system that isn't actually contributing anything to the results that you're getting? What if it's actually holding back the system, like making the results worse? If you only test the overall system, you're never going to figure that out. When we were building the automated system, we had to do that for everything, and it did get a little bit tedious at times. When we wanted to include anything new into the system, we had to test it out on its own and then with the system as well. So since the system was something that wasn't really visual, like you couldn't watch it and see what it was doing, it was just something that was running in the background, it meant we also had to create an indicator version of each of the different parts, something that was more visual. And this is why we ended up with so many different indicators, so that we could test them and make sure they're doing their job, doing what they're meant to be doing, before then including it in the system itself and then testing the system. And in fact, the system also had a visual version that was just there to collect data. So just like you can see here, this is one of the versions of the system that shows lots of different levels that have different criteria. So then this section over here is what will record the data. And then we also had a CSV file automatically created with all of that data on it, so we could crunch the numbers, analyze it, and see what went right, what went wrong, what we need to change. We also had 2 or 3 people that would track every possible variation and then cross-reference it against the automated system. And I'm talking 24 hours a day. One person would do their shift and then hand over to the next person, and so on and so on. It was that in-depth, the testing that we did. It's funny, I remember when we put out the video about chart patterns, the truth about chart patterns, where I was saying they've been proven not to work, a lot of people complained about it. And a lot of the justifications people had was that these patterns are only a guide, or they're only one part of a system, and that you need to use them combined with this, this, and this, or with this thing. And that might be the case. But if chart patterns on their own have been tested and been proven not to work in the way that they're meant to, then how do you know that if you're profitable while using them, it's not all of the other things that you're saying it needs to be combined with? What would happen if you removed chart patterns and replaced it with something that is proven to work? And this is the same with a lot of other systems and a lot of other things that people use. People almost have this crutch, which is this thing they've learned and they've incorporated in their system. But if you test that thing and it's not working in the way it's intended to on its own, then don't justify it with the rest of the system, because it might actually be holding you back. And that's definitely what I thought was the case there, and it's definitely what I saw with many things in our system. But you need to break it down and to be able to test things individually, and then together as a system to be able to figure that out. But with that in mind, you also need to test each part of the system under the correct conditions. So if something isn't intended to predict something's going to happen or to generate a profit, then don't use that as the testing criteria for that part of the system. Instead, you need to figure out what sort of testing conditions is going to help you understand whether that thing's working or not, and then test it under that, see if it's fulfilling its role and doing its job. Okay, so with the automated system, when we had our results from testing or live trading, it was then important to know whether the system was achieving those results by doing what it was supposed to do or not. This is also why it was so important to have real people testing manually and why we needed to document everything. So there are 3 aspects to this which I think you should use for your own manual trading as well. Whether it's a good or bad result, you need to decide 3 things, okay? So firstly, you need to know, was there any human error involved? So in other words, did you make a mistake or not follow the system and that led to this result happening? And that can be the same for good or bad results. It's not just the ones that went wrong. Secondly, was there system error involved? Was the system not following what it should be doing? Or is there part of the system you have for a specific purpose and it isn't really fulfilling that criteria, which has led to that result happening? And thirdly, is it just poor performance? No, you follow the system correctly, it's perfect, the system's doing what it's supposed to be doing, it's fulfilling its purpose, but ultimately, this overall approach, this system, is just not profitable. Basically, what it comes down to is don't always assume a result, whether good or bad, is because you followed the system correctly and the system is doing its job properly. Go deeper and find out for sure. Following on from the last point, if you really want to improve your system and improve your trading performance, you need to understand why things are happening. It's not good enough to just assume or to lump everything into one group. We need to be precise about it. So for this, we broke everything down into building blocks, taking more of a first principles approach where everything is down to its real, essential, fundamental parts. And the aim of doing this was to figure out what parts actually contributed and did as they were meant to, and which parts weren't, which parts could be scrapped. We wanted to remove as many elements of luck out of the equation as possible, whether good luck or bad luck, whether it was actually meaning that we were getting more profits or not, it needs to be removed so that we could control what we were doing. So for example, if we go back to the chart patterns that we were just discussing, sometimes chart patterns will work perfectly, but it won't be because of the chart pattern itself. If you break it down, you'd find the building blocks of that particular situation and understand which parts were contributing to the good result, rather than the parts that were just a superficial pattern that's actually been disproven and is not doing anything to contribute to good results. And the same was true with our system as well. We made discoveries about the market and the way that the price moves. By finding market symmetries, we were able to figure out fundamental laws of the markets and price movements and understand more about the building blocks that we could use to capitalize on that. And by the way, if you want to understand more about that, I talk about it a bit in module 4 of our free trading course. The link is in the description box down below. So this also goes for the outcome of each trade as well. You know, if you see that the market moves dramatically and abnormally and you make a huge profit from it, don't just assume that it's because your analysis was so great. Instead, try to check out what caused that market move. If it was down to some news event that was unexpected and you didn't have a particular view on what was going to happen with that, so your trade therefore wasn't based on it, then you need to accept what part of that success of that trade was down to luck. It was only by figuring out why our system sometimes performed breathtakingly well and other times struggled that we were able to make adjustments based on the context of those situations and get much more consistent performance for the long term. Alright, we're on to the final point, and this one I think is probably the most important one. You know, if you're learning a sport, you obviously can learn from seeing people do things and having people teach you, but you get to a certain point where you're going to improve dramatically more if you practice by playing against someone that's better than you. If you keep practicing where you're dominating someone, where someone knows less than you, they're less experienced, they're less able than you are to perform well, then you're going to hit a limit, and that's going to be your peak and you're never going to push past it, or at least not very much. Whereas if you play against someone better than you, you're constantly being challenged to improve and to look at your flaws and to address those, and you're constantly going to be pushing yourself to do more and more. And the same is true with trading and anything else that uses your mind. Because with this team, I was dealing with people that were much more educated than me, much more experienced than me, much more knowledgeable in certain areas of trading than I was. And therefore, by having discussions and having my points of view challenged, I was able to improve and expand my knowledge and make connections that I didn't otherwise think were possible. And the outcome of all of this was that not only did we make discoveries in the market, build a system that we were very happy with, but also actually produce an academic paper explaining all of the discoveries that we made, something that when I read it now, my mind is still blown, and it was something I could never have expected could have happened. Just like I mentioned earlier in the video, one of the main people I was working with on that team was a physicist who was also from the banking world and very experienced. And I don't use this word lightly when I say that he was actually a genius in that whole area. Like the way he could look at the theory side of things and come up with the theories based on what I was showing him from the practical side, it was amazing. It blew my mind. And it's down to him, the theoretical side mainly, that we had such a solid underlying theory. And that completely changed the way I looked at the markets. It completely opened my mind, and I'm still proud to this day of the breakthroughs and the discoveries that we made. And that's why we invest so much into our community for our members, because discussing things with other people and challenging your thinking is so important to develop, not just in trading, but in anything in life. I think there's a tendency these days for people to be so stuck in their opinions and not want constructive criticism. They want to convince people to side with them. You know, people argue to convince the other person of why their point is right, rather than arguing to learn and to get to the truth. And that's the difference when you work with people who can push you to better yourself, is that rather than discussing and arguing to win, you're actually discussing things to get to the truth. And that's how we managed to have such a successful team there and achieve such great things. All right, I can sense myself falling into like the reminiscing mode, and I think I want to save that for when I do the video where I talk about my experiences for that time and show you what we actually discovered. So if you want to know more about this already, then remember module 4 in our free course, I talk a bit about the theory that we discovered, so you can find the link in the description box. And if you like this video, leave a comment below letting me know which point you found most useful. Get that trading finger out and hit the like button. Don't forget to subscribe to the channel for the best trading content on YouTube right here. I appreciate you watching. Take care and I'll see you soon.